business owners, there's a legit and legal way to shift thousands of dollars expenses that you're incurring on the personal side over to your business without triggering a tax bill, without committing tax fraud, and without getting audited by the IRS. And I'm going to show you how to do it. What's up, guys? My name is Andrew D'Amico, CPA, partner here at Ledgerly alongside my partner Mike, where we're talking about tax strategies, saving clients money, improving their asset protection, and helping them build generational wealth. If any of those things pique your interest, make sure you're subscribing to this channel. Now to our topic at hand, pushing personal expenses over onto the business side. How do you do that? What am I talking about? So I'm first talking to business owners, whether you just have a side hustle, someone's giving you a 1099, or maybe you have an actual hustle. You're a small business owner. You're a partner in a partnership, or you have your own S corporation, right? You're running a business, and as such, you have separated your business and your personal activity, right? You have a business set of books. That's going to be on this left side of the whiteboard, right? Where you have a separate business checking account, most likely a business credit card, and maybe you got some excess monies, you open up a business savings, right? And because you're running and gunning in your business, you're meeting with clients, closing sales, managing employees, you're running around running the day-to-day, so you've outsourced bookkeeping. Or maybe you do it yourself. But whoever's doing the books has a bookkeeping software in place, like a QuickBooks, a Xero, a Wave, whatever platform. And on this software, they're linking all those business accounts to track the ins and outs of the business. And at the end of the year, you turn out a profit and loss and income statement, and you report that on your tax return, right? That's your first set of books. Now, why am I talking about first? Because we want to have, as a business owner, a second set of books, which is going to help us with the thesis of this video, push personal over to business expenses. Now, when I say personal expenses, I'm not talking about your everyday living expenses. I'm not talking about your mortgage payment. I'm not talking about everyday groceries, doctor visits, utilities, whatever. I'm not talking about those genuine personal expenses. I'm talking about for the times you meet a client downtown, you run out to the store, you're in construction, you're at Home Depot, and ooh, forgot the card. I forgot the business card, but I need these supplies. I need to land this client. Now you have a genuine business use for this purchase and you use a personal credit card. Totally fine. But just because it didn't go through our bookkeeping software on the left side doesn't mean the deduction is lost and we can't take it. That's why you want to use a second set of books, use what we call an accountable plan. That's a policy that's formally adopted by your company, by your business, and you sign it, that says, hey, for genuine business expenses that were paid for personally, whether it's by an employee or you, the owner, those can be reimbursed. And that's how we push the personal expenses over here that we're tracking in this accountable plan, and we push it over onto the left side. You should be checking this monthly, at least quarterly, going back through your personal statements. Okay, oh, yep, I remember this meal or that coffee shop. I remember that was a business meeting I had to pay for out of pocket. Or, yep, that trip to Home Depot or the hardware store or the purchase online. Oh, yep, personal card, but no, it's got a business use. Next question you got to ask yourself, was it 100% business? Or do we need to allocate it? Because we're not going to write off everything under the sun. There could be times where you use something only 10% for business, but we're going to document it. We're going to keep logs for it. We're going to substantiate that expense, and we can still reimburse ourselves for it. Because as a business owner, you want to capture every single deduction you're entitled to. So, I mean, I alluded to a few, but let's talk about what some of those expenses could be and what it looks like for you. So things I'm going to track in my accountable plan, right? They could be those meals with clients, forgot the card, any sort of supplies, electronics, maybe work from home, iPads, laptops, second phones, furniture, maybe some softwares, right? And I mean, the list can go on and on. But really, all you're looking for is anything with a genuine business use. And this is going to depend on the industry you're in or the business you're running. But if there is a benefit to the business, it's going to help you in the operations of said business, we can track it through this accountable plan if we didn't put it through the business. And I said you want to do this, at least quarterly. This is a formal, you're going to have to adopt this accountable plan policy, and oftentimes it'll say, oh, reimbursements need to be submitted within 90 days, 120 days. Depends how you write it. So that's why we advise, do it on a quarterly basis. That's going to help you in the event of an audit, right? If we're trying to substantiate and take credit for expenses we paid over a year ago and we're a cash basis taxpayer, IRS probably not going to like it. So let's go through an actual example. Let's just say we are in, this will come important later. Let's say our tax bracket is 30% between federal and state. And we're going to do it on a quarterly basis. I'm recording in July, right? So we're going to get our months going here. So this will be our Q3 reimbursement. And you just go down the list. So, you know, you can keep this on paper and Excel, any reasonable means to track it. Because again, I said this is a strategy that's not going to trigger an IRS audit. But if you ever do get audited, you want to have this backup to substantiate these deductions. So I'm just going to write some random numbers up here, right? So let's say out-of-pocket meals was like $350 in July, $100 in August, maybe another $150 in September. Electronics, maybe you bought an iPad. I really don't know how much those cost, like maybe $400. Maybe you bought one in July, maybe no other electronics the next 2 months. Maybe your phone bill every month is like $150. Maybe you got a spouse on there. Maybe you have a few phone lines. Maybe kids are on there. And that'll be important in a second. And then furniture, maybe you bought a desk for like $600. And again, maybe nothing and nothing. But you know, what does that come out to? So up here, I got about 600 on the meals. Got 400 here. I got 450 on the phone, and then I got another 600. So right now, I'm looking at maybe some expenses with some sort of business use tied to it at $2,050. But I'm not going to reimburse myself this full amount because we need to take that next step. We need to substantiate the business use. Maybe the meals, you know for sure, they were all with clients. We're going to say, you know, this was definitely 100%. The electronics, if it's an iPad, how are you tracking that? How are you going to prove out $400 worth of the entire iPad? It's more likely there's probably going to be some personal use tied to it. But let's come up with an allocation of methodology that we can stand firm on and say, hey, it's genuine 50-50%, right? I use it about 40 hours in a general work week, Monday through Friday, an 8-hour day. I'm using it 8 hours. That's all business use. But then on the flip side, maybe my kids use it, spouse uses it, friends use it, you yourself use it to watch Netflix at night, whatever. Let's say you have 40 hours of personal use during the week, and then at nights and on weekends, it's another 40 hours of personal use. So let's just call that, for simplicity, 50%. The phone bill. This is a simple example when you're adding a second phone. You bought a second phone strictly for business use. You're not limited to just writing off the phone, but that monthly phone bill, maybe you added it to your personal phone plan that's got you, it's got your spouse, it's got the kids line, but it's also got your business phone. Now you're paying this personally, but that's a 100% business use phone. We don't have to substantiate use of it, but we do have to break it out of the monthly phone bill. So let's say you and your wife have $50 phone bills on the personal phone, and then your business phone bill is $50 a month. So we're going to peel out 33% of that. Again, in my simple example. And then the furniture, maybe wife uses it for personal budgeting, or you have some uses for it outside. Could be taking night classes, or maybe you have kids who use it for school. I don't know. But let's just go out and say, you know, another 50%, right? 50% of the time, it's you and your business. The other 50%, various personal. And then you apply these business use percentages to the total amount that you itemized. Running out of space here, so I'm going to run down here, but you can follow me along. So the first one is 100% business at 600. Next one's only 50% of 400. That's 200. A third of the 450 is 150, and the 50% of the 600 is 300. All right. So let's see how we made out. That's 800, 950. Okay. I got 1250 in reimbursable expenses. And this is just one quarter. Again, you should be doing this really monthly, but at least quarterly. And now you're going to cut yourself a check from the business account for $1,250, and you're going to write on it, you know, employee reimbursement, accountable plan expenses. And we revisit my little note up here, 30% tax bracket. If I do my math correctly, that comes out to about like 375. From this quarter alone, you're looking at about $375 in tax savings just by using and tracking our personal expenses through the second set of books, through this accountable plan policy. And guys, take this a step further, and we do this by 4 quarters, right? At that same rate, we're talking, you know, I'm leaving so many lines out here, But that could be $1,500 in taxes saved. So this is an incredibly powerful tool. If your current accountant isn't educating you about this, isn't telling you about this, doesn't even know about it, you need to drop them and get in touch with us, or at least an accountant that is educated and knows about this and can coach you through it and how to do it and ultimately implement it and provide you those savings. But it's literally non-negotiable for our clients because we want to take every single deduction we're entitled to. Please like this video, comment your questions, and subscribe to this channel to stay up to date on tax saving strategies, asset protection strategies, and generational family wealth building strategies. See you guys again soon.